Hello everyone, and welcome back to our channel. Whether you're a seasoned investor or just setting sail into the world of trading, we're here to help you navigate these exciting waters. Today, we'll be delving into a topic that's crucial for all budding traders: Forex versus stocks. Which is better for beginners? Let's break it down. Now, if you're just starting out, the sheer volume of options in the financial markets can feel overwhelming. But fear not. We're here to demystify two of the most prominent trading avenues so you can make a choice that aligns with your goals and lifestyle. First up, we have the Forex market. It's the largest, most liquid financial market in the world, with over $6.6 trillion being traded daily. Forex offers the advantage of round-the-clock trading from Monday to Friday, which means you can trade at practically any hour that suits you. It's a great option if you have a busy schedule but still want to dip your toes into trading. On the flip side, we have the stock market. Stock trading typically happens within set trading hours, such as 9:30 a.m. to 4 p.m. Eastern Time for the NYSE. While this might seem less flexible, it offers its own set of perks, like potential dividends and the opportunity to own a piece of the companies you're passionate about. Want liquidity on your side? Forex markets usually provide higher liquidity. This means trades can be executed quickly with minimal price fluctuations, perfect for those who like to keep a dynamic portfolio. Stock market liquidity can vary, though large-cap stocks like those from Apple or Amazon offer pretty high liquidity too. Now let's talk about leverage. Forex can provide high leverage, up to 1/500. While that's exciting because it can multiply potential profits, it does come with increased risk. The stock market, conversely, generally offers lower leverage, usually around 2:1 or 3:1, which can be a safer bet for beginners wanting to avoid massive risks. Let's not forget the importance of deep research and community insights in trading. Taking the time to investigate your chosen markets deeply can significantly enhance your trading outcomes. And hey, that's exactly why you should hit that subscribe button on our channel. Join a community of like-minded individuals where we share ideas, strategies, and insights that can guide you towards making informed decisions. But remember, whether you're drawn to Forex or stocks, it's essential to know that trading always carries risk. It's never wise to put all your money into trading, as tempting as it might be when you see potential profits. Always consider your financial situation and risk tolerance before diving in. In conclusion, the Forex market offers flexibility, especially appealing for its accessibility and lower initial investment. However, you need to manage the high leverage and volatility carefully. The stock market can be more predictable, promising ownership and potential for long-term growth, though with limited trading hours and possibly requiring more upfront capital. The key is aligning your trading choice with your personal goals and objectives. Whether you're leaning towards Forex or stocks, make sure it suits your financial plans and your willingness to learn. Thanks for watching, and don't forget to subscribe for more insightful trading content. Happy trading!